Well, welcome back, ladies and gentlemen, to Jaguar Mining's channel, a growing gold producer during a booming gold market. Joining us to give us a high-level overview of some of the blue sky opportunity, a little bit of some of the financials and just kind of their assets moving forward. We have Alfred, the CFO, joining as always. Welcome back, sir.
Thanks very much, Kyle. So I'm here to talk about our ongoing plans for growth in our production, starting with our two flagship mines. And last time I talked about our fine project at Turmalina, but now we've got probably the most exciting opportunity is at our Pilar mine. We have the new BA-Torre zone, which is a discovery that came up out of 3 holes that were put out a year and a half ago. And we put a bunch more holes into it, and we defined a new zone with materially higher grades than the rest of the grades at Pilar. We put a press release out in early March on this, and we have been doing ongoing drilling. This is going to increase the production, the tonnage, and we've already seen in April we had the highest single month of production from Pilar, partly fueled by this material coming out of this zone. By second half of this year, we expect to have that BA-Torre zone in our resources for 3101, and but by 2026, I mean, it could remake the mine. So we think that by 2026, I mean, it could possibly even double the production of Pilar. This is a possibility that we're looking at. This is why we're so excited about it. And in addition, you know, we have our Pitangui project, which is the project that we acquired as part of the IAMGOLD Brazil acquisition that we completed last September. Pitangui is an underground deposit with just over 800,000 ounces in resources between measured, indicated, and inferred. It's about 20 kilometers or about 12 miles away from our Turmalina plant, which is where the material from Pitangui will be shipped, trucked, and processed. And it's a narrow, or not a narrow. It's a shallowly sloping, not very deep deposit, and it's an oxide deposit. So we'll recover up to 90%. And the good thing there is that it will be processed at our Turmalina plant. So there's no capital needed for a new processing facility. And this mine will increase production by about 30,000 ounces per year. And that first production is expected in the second half of 2026. Permitting is already underway, and the main time delay for that 2-year gap for permitting is that we need 2 years of rainy season in the books for the baseline. And so second half of 26, this will be increasing our production as well. And utilizing that excess capacity that we have at Turmalina, just like the excess capacity that we have at our Kaite plant, which processes our Pilar ore. And this just underlines the fact that we are asset rich, and in a high gold price environment, that's the best place to be, because we have additional capacity to process incremental ore. We have a third complex, which is called Paciencia, which has been on care and maintenance since 2012. This mine was closed with a large number of resources still in the ground there, and so we have a plan to animate that operation and begin feeding that material initially through our Kaite plant, utilizing that additional capacity. So Jaguar, being asset rich, is in a high gold price environment, is a phenomenal attribute for the company, because we will scale the production upward very quickly.
Yeah, and I definitely feel like shareholders are slowly starting to recognize the value here. I mean, you guys are trading at a fairly cheap multiple in a rising gold price environment, like you said, being asset rich. It's intriguing. It'll be intriguing.
And sorry to cut you off, Kyle, but and to prove up that cash flow, the cash flow generation that we saw, we ended September 30th at $20 million cash balance. We ended 2023 December with $22 million in cash, and we finished the end of March with $26.4 million in cash. And so this just underlies the fact that we have positive margins, with all-in sustaining costs in Q1 just under $1,500 an ounce. And so this is a good place to be, and just also underlines the fact that we are cash flow positive, and so we're not dependent on financing to exercise these growth projects.
No, 100%. I definitely appreciate the insight as we pass it off to the viewers. We'd love to know what you think, and consider subscribing, because when catalysts and news continue to evolve and hit the wire, we'll bring it to you here. But on that, we look forward to catching you in the next one.